and welcome. You're watching Closing Trades on ET Now with me, Snehi Shah, and with me is Shrishti Sharma. And let's take stock of what the markets are up to right now. And there on the bottom of your screen, you have the Nifty 24,304. So, good recovery coming in from the day's lowest point, 0.6% higher. And even if you see this on the spot basis right now, 0.5% uptick coming in for the Nifty as well. Sensex too holding above that 80,300 mark quite comfortably. Remember, yesterday we just closed at 80,004. So it's a good uptick coming in on Sensex today, 0.5% run up on that front as well. Nifty Bank seems to be doing pretty well for itself, 0.3% uptick coming on this indice as well. But if you take a look at the broader markets, now they're continuing to shine in today's trade. Let's pull out the Nifty mid cap, 0.5% uptick coming in, but the real winner today seems to be the small cap space, and this is the third session in a row where the small cap has been outperforming the benchmarks and the mid cap index. 1.1% gain coming in for the small cap space. So these bunch of stocks, they seem to be doing pretty well. If you take a look at some sectoral gainers and losers in today's trade, you have energy, that's your top sectoral gainer, and you have the Adani group of stocks, Adani Power, Adani Green, that's contributed to energy being the top sectoral gainer, followed by media, auto, metal, IT. Banks and PSU, banks and FMCG just holding on to the gains by the skin of its teeth. But if you take a look at what's not doing well today, Nifty Pharma, 0.6% in the red, and Nifty Realty on the back of the fall we saw in prestige estates coming in on the back of that Morgan Stanley note. So, well, yes, so Realty and Pharma are lagging away, but other than that, the market breadth is seeming good, and 0.5% uptick on the Nifty is, on the spot basis at least, is where we're at right now, Shrishti.
Well, certainly, great moves coming in on the index level, Snehi, but a lot of stock-specific action indeed. And look at the move that we are seeing in Ola Electric, because that counter is zooming away in trade. Yes, there have been new launches by the company, but not just that. Citi has come out with a very positive note on this particular counter. Coverage started the coverage with a buy rating and target price of 90 rupees. And look at the move today. Yes, indeed, this has been one of the beaten down stocks, but the stock is locked in an upper circuit of 15%. What they're saying is that the right can be rewarding, and India versus China story paves a long way to go, shows direction for Ola Electric, as well as there are so many moving parts from motorcycles to E3-wheeler launches. Those are expected to aid the volume. If we talk about another stock that is in focus today, and that is indeed CG Power, as the company has bagged a new order worth rupees 500 to 600 crore rupees from Government of India. The execution time is 1 year, and indeed a positive news flow. The stock is zooming away in trade, almost 4% of gain. So all in all, Snehi, a lot of stock specific action. A couple of more sectors that I would like to add and put the spotlight on is the telecom space, because once again it's Vodafone Idea that is up around 6.5%, but not just that. Industars is also holding on to gains of 3%, and along with that, the cement pack is also doing pretty well. Though with the Adani group of counters, stocks like Ambuja and ECC are holding up strong, but Ramco Cement is another stock that is holding on to gains of close to 3%. So all in all, great day for the market seems like, and along with that, the bulls seems like they're full charged up. Sneha.
Absolutely, it's looking good for a couple of these names, and let's talk about Ola Electric in a little bit more detail, because the run up that we've seen on that stock today is quite surprising. It's 20% upper circuit coming in for this stock, and let's welcome on board Deepan Mehta, director at Elixir Equities. Deepan, hi, thanks so much for joining us. Give us a sense of what you make of this counter, because Ola Electric has been vulnerable to a lot of volatility just in the last couple of weeks. So tell us what you are making on this making about this counter, and fundamentally how does this stock look to you?
Good afternoon, and thank you for having me on your show. One cannot really comment exactly why the stock is up 20%. There's no specific fundamental news which has come to my notice, at least, except that they are keeping on launching new models and they're addressing their complaint-related issues. But apart from that, I don't know why the stock is up 20%. But I can say one thing, that even at these levels, the stock is extremely expensive, and the losses, when they will recover from that loss situation, is very difficult to say. In my estimate, the turnover may need to grow 2 or 3 times from these levels before they can try and break even as well. And that's not something which I've done a very deep analysis about. So given that, we are in a kind of a corrective phase in the market, and given also the fact that this is not a platform business, there are a lot of high variable costs over here. And there's also a lot of competition coming in for Ola Electric. Keeping all of that in mind, I would just like to avoid the stock at this point of time. Typically, you want to buy into good growth stories which are solid in the black and which have got less uncertainty as compared to Ola Electric. So it's an avoid from our point of view.
Right, that's an avoid, and the fundamental factors that Deepan is highlighting is key to note, because seems like the risk on trade is back in the markets, because a lot of these stocks from the broader markets are doing pretty well today. But let's understand more that on the technical front, where are how is the setup for the markets right now? And Kunal, very good afternoon. I would like to come to you. Almost 100 points gain for Nifty 50. Nifty Bank 183 points of gains for the last 1 hour. How do you see the setup and the movement in the markets?
I think it's been an okay day for the markets. Third day of the index consolidating, but the bias has been positive when we look at this over the market breadth, over the sector approach, the sector moves, the stock specific follow through, which we're seeing for individual names. So I think that's a sign of strength coming out for the index on an overall basis. The good part about the markets is that it's the expiry week, so there are bound to be activities which is going to impact rollovers for the index. And so far in the last 2 days of this week, we've seen that the short rollovers for the indices, both the Nifty and the Bank 50, is to a much lesser extent than what it was in the last many weeks of the markets going to a corrective phase. So which means that the markets are entering into the December series, or likely to enter into the December series on a much more lighter note and not heavy on terms of the shorting side. Now the other factor to look out for is the dollar index, which over the last 3 to 4 days has been falling from 108 to 106.4 now. That is also aiding the market rally. So my sense is that if the dollar index falls below the 106 mark, I think we could probably get a further leg up of another 200 points at least on the Nifty over the very near term.
So that's Kunal's view, 200 points uptick expected on the Nifty. Nuresh, we'll come to you also for your view on the markets. But before we do that, here's an exclusive story. The Oil Ministry is pushing to bring natural gas under the GST wing and has approached the Finance Ministry amid reduction in the APM gas supply to city gas distribution companies. My colleague Prakash is here with some very exclusive details on this story. Prakash, hi, thanks for joining us. Take it away.
Yes, an important development coming in, as we are learning from our sources that the Oil Ministry has made a fresh push to bring natural gas under GST. We are given to understand that the Oil Ministry has approached the Finance Ministry again amid a reduction in APM gas supply to city gas distribution companies. As you are aware that the government has cut APM gas supply by up to 20% to city gas distribution companies for 2 consecutive months, which has forced city gas distribution companies to approach government for a long-term solution. And therefore, Oil Ministry has sought the inclusion of natural gas under GST to ensure affordability. In fact, active deliberations are taking place with all the stakeholders, and various meetings have been held over the last 2-3 months. Along with that, we are also given to understand that the Oil Ministry has provided additional data to the Finance Ministry on its impact. And the good thing is that the major states, including Gujarat and Maharashtra, have agreed on the proposal, and the Finance Ministry is working on the proposal to present it before GST Council. A very significant development coming in. Sources are also saying that the idea is to bring natural gas and ATF under a GST in a graded manner.
Thanks, Prakash, for all of those details. Exclusive word coming in from sources. There's a push to bring natural gas under the GST ambit. Let's see what happens on this front. But let's keep it going about the market discussion that we were having before Prakash joined us. And Nuresh, coming to you now, also give us a sense of what you are making of the markets, and particularly about the broader market space, because if you take a look at small cap index, it's been consistently outperforming the mid cap as well as the benchmarks over the last couple of trading sessions. Tell us if you believe this rally that the small caps have seen is going to sustain. How sustainable is this going ahead? And or otherwise, do you think the large caps are once again going to attract all the bull attention again?
So if you look at the last 3-4 sessions, we've seen a strong recovery in the small cap index. We've seen even today it's a 1 percentage plus point move. But in the previous fall, where we started from, say, 7th of November, the Nifty was closer to 24,500 around that price point. In that dip towards 23,200, we saw a larger fall in small cap index. So even now, we are still away from those levels, whereas the Nifty has covered 24,330 odd levels. So for now, it is just a catch up for the overfall we saw in the small cap. But today, the most important part is if you look at the breadth, we have a very strong breadth across the board. The Nifty may not show more than 100, 150 point tick, but if you look at the broader markets, we've seen a good move across the board. So the bias is positive. The next price point which we watch out for is 24,500, 600. And if we sustain above that, then we take a test to 25,000, 25,200. And 24,100 now becomes a critical pivot point for the near term.
All right, that's the take on the mid and small end of the market. But Kunal, a couple of these PSU names have started to bounce back, and specifically from the likes of BEL as well as NTPC. So any of these stocks looked attractive to you, or apart from these two names, any stock that you would like to point out?
Yeah, so BEL is attractive. BEL, BHEL, I think these are the two names which are looking quite attractive on the charts. We've looked at the PSU banking lot, and that's another pocket which is also looking attractive, right from the likes of the stronger names, SBI as well as Bank of Baroda. And now you're seeing many of the mid-cap end of the PSU banking lot, Union Bank, etc. These stocks have also started to look very attractive. So as a basket overall, what happened was, over the last 4-5 months, from May or June somewhere, many of these PSU banks, PSUs, they topped out. There was a correction of 40-50% for many of the PSU names. The likes of defense stocks, for example, and then there was a slew of correction of 20% odd for many of the PSU banking names. Now it looks like that a major part of the correction is out for these stocks. We've seen base building happening for many of the names. They were struggling below their long-term moving averages for quite some time. Many of these stocks have made a comeback towards their long-term moving averages. So when we look at this as an overall pattern, it looks like that the PSU basket on an overall basis is making a very strong comeback. My bet would be probably on the defense pack, as more of high beta pocket from here on. I would probably expect the likes of BEL, HAL, even the other stocks like Cochin Shipyard, Garden Reach, etc. These stocks should fare pretty well for themselves. And from the PSU banking lot, I think SBI and Bank of Baroda could be strong leadership moves even going forward.
Okay, so a couple of names that Kunal is liking from the PSU basket. Deepan, tell us if you agree with this view, how would you play the entire PSU space? And after the recent correction, do you believe that now this space is starting to look attractive from a medium to long-term investment view?
I think investors who are underweight PSU, whether it is banks or defense companies or engineering companies, I think this corrective is a good opportunity for them to get at least equal weight as far as PSUs are concerned. I think that over the medium term, 3 to 5 year view is very positive given stability in the government and what we have seen in Maharashtra as well. And the trend which we have seen for the last 4 or 5 years of PSUs going from strength to strength, that trend may also continue. But it's important to get into these counters at the right prices. I think a lot of defense stocks have certainly corrected significantly. One could look at those counters as a good entry point. With usual disclosure, I think that we and our clients are invested. The best pick amongst defense still remains Hindustan Aeronautics and Bharat Defense, high-tech companies with great order book and earning visibility. And within the banking space, if investors are underweight the banks and they need to get equal weight over there, then I would say that SBI and other tier 2 PSU banks, I think, may offer better risk return profile and maybe higher returns as compared to some of the larger private sector banks or some of the other larger NBFCs also.
Okay, so that's the view coming in on the entire PSU basket. Deepan, thanks for sharing your view, at least on the defense pack as well as the PSU banks. But while we are speaking of government capex and the new coalition government's focus areas, Nilesh Shah, MD at Kotak AMC, says that the focus needs to stay on land, labour and farm reforms if India wants to grow in double digits going ahead. Let's go across to listen in as we slip into a very short break.
Undoubtedly, we have moved from majority government to coalition government. And under coalition government, certain things will continue to happen, like digitization, like defense and R&D spending, like infrastructure. The focus will also be on employment, skilling, housing kind of things. The good part was that at the center level, fiscal prudence path was maintained, and next year's target of 4.5% on fiscal deficit is a very good target. However, as coalition government, there are certain things which will not be accelerated. For example, strategic divestment looks a bit difficult. Land reform, labor reform, farm reform, judicial reform, these are also likely to be on slow track. So the hope is that with this kind of mandate, government gets the courage to fast track those reforms. With the work which is being done, we are good to get 5, 6, 7, 8% GDP growth on a sustainable basis. But if we want to emulate China, if we want to grow into double-digit growth, then basic reforms around land, labor, farm, and judicial is necessary.
Welcome back to Closing Trades on ET now, and let's put the spotlight on the capital goods space because the earnings are through. So let's try to draw a comparison between the capital good MNCs. We have Cummins, ABB India as well as Siemens on the radar, and Ria is here with a comparison that she has done. Over to you, Ria.
We have all the numbers for the MNC capital goods companies. Overall, the numbers have been good for Siemens and Cummins, while the numbers have been a little weak for ABB in this quarter. Now, Cummins has seen the highest revenue growth in this quarter of around 31% on a year-on-year basis, which was backed by healthy domestic demand, even though the exports remain muted in this quarter due to the geopolitical tensions in the Middle East and West Asia. In terms of EBITDA growth as well, Cummins saw the highest growth on this front as well, around 41.8%. If you talk about the margins, Siemens has seen the highest margin expansion in this quarter of around 247 basis points, which was likely driven by the better pricing power and product mix in this quarter. Even on the net profit front, Siemens has witnessed the highest growth of around 45.4%, which was largely aided by growth in other income in this quarter. If you talk about order inflow as well, even on this front, Siemens has outperformed. We've seen a growth of around 37% on a year-on-year basis versus just about 11% for ABB. For Siemens, the growth was backed by healthy demand across all business segments, although in the digital industry segment, we continued to experience some normalization in demand in this quarter. And for ABB, the orders were led by the electrification segment. So that is how the numbers are stacking up for the MNCs in this quarter.
Well, thank you so much, Ria, for drawing that comparison for all of us, that how these capital good companies and especially the MNCs have performed in the quarter gone by. But sticking to Siemens then, there's one more report that is putting the spotlight on Siemens, and that is coming from Phillip Capital, where they're saying that the parent company, that is Siemens AG, can actually look for, there is a possibility rather for some stake sale in the times ahead. What they were trying to highlight is that all these AMCs in the recent past and the parent one have actually gone ahead and offloaded some of their stake in the Indian listed company from the likes of Hyundai Motor. There was an IPO that we have seen. Even in ITC, BAT has reduced the stake, and maybe there could be some stake sale. There is some possibility of an overhang there because the parent has said that there's a substantial financing potential from the sale of the shares, and Phillip Capital believes that the 10% dilution can actually fetch $3 billion for the parent. So on the back of this report, this counter is in focus, but that's a development that we are tracking, whether or not this happens or not. But parent has not ruled out the equity stake sale, though they have not specifically pointed out the Indian listed entity. But Dibin, I wanted to have your take on the earnings then. How do you see the earnings of all these MNC players and any of the top bets that you have in this particular sector?
Basically, these counters are quite tight in terms of liquidity, and there's a great deal of scarcity as far as the floating stock also is concerned. And historically, for the past several decades, they've always been trading at very high P multiples, which is why we've always kind of avoided them. But end of the day, they have given great returns, and investors are always impressed by the corporate governance standards and the positioning and the kind of technological edge which they have. But from a fresh investment, I would avoid existing investors, be it ABB, Hitachi, also Siemens. All of these companies, I think, as existing investors, you may remain invested. But I don't think this is the time to take a fresh investment. These are great stocks to buy when there's a down cycle in the capex cycle, and these companies the earnings are stagnating or even growing negatively. But not at these times when the stocks have rallied as they have, and we are in a very, I would say, strong capex cycle. So for now, it's a hold for us.
Call coming in from Deepan. Deepan, thanks so much for joining us on the show and sharing your outlook on sectors as well as the overall market. On that note, we'll let you go. But with that, Kunal, let's come to you for your closing trade. Tell us what's looking good on the charts to you.
Yeah, so I think Jubilant Food is a very interesting chart shaping up. The stock now trading around the 645, 650 levels. it's forming a bullish flag formation on the charts. Very attractive volume patterns for the stock in the last 3-4 days. So would look out to be very bullish on Jubilant Foods over the very near term.
Okay, Jubilant Foods looking good on the chart for Kunal. Nuresh, what's your closing trade coming in for today?
So that would be a buy on Syngene. The stock looks promising in terms of the momentum breakout, which has done in the last few sessions. Not far away from an all-time high of 945, 950. Looks set for a fresh move to a new all-time high.
All right, then that's Kunal's as well as Nuresh top bets coming in from the markets right now. But with this, viewers, it's time to slip into a very short break in this edition. Don't go anywhere. We'll be right back.
Good to have you back on Closing Trades. You're watching ET now. Now, the auto pack has been in the slow lane on a week-to-date basis, but holding up pretty smartly today, and that's on the back of Mahindra & Mahindra, because that company has unveiled 2 new electric vehicles yesterday, which will be sold in the Indian markets first, and the exports will begin at a later stage. The company is hopeful of maintaining 15 to 18% growth outlook for its SUV business in the current financial year. My colleague Sumit Chaturvedi caught up with the ED and CEO. Let's go across and listen into that chat.
These are excelling in multiple things. So performance, ride quality, noise levels, the sound system, the battery, lifetime warranty that we've announced. Of course, there's some conditions, but lifetime warranty. All of these are things which are really path-breaking and comparable to the best of global global luxury electric brands, but at Indian prices. So we believe that is what is going to disrupt and create this category.
And what does it mean for a brand like yours, which is definitely a lifestyle, a premium brand? Now coming into this category, how you plan to focus more on what kind of customers you'll focus more on?
Yeah, so we've seen with our brands that we've launched in the recent past, what we're getting is a set of customers who are looking for adventure in their life, exploration, new tech, sophistication. And we believe that many of them, which is that type of customer, are going to get attracted to this proposition because this meets all of that. It's standout design. So when you're in it, I'm sure when you were driving on your way for 2 hours in the morning to this proving track that we have here, many people would have taken shots and photos. And I heard this from many other people who've driven, about more than 150 of you drove in. Where you were stopped on the road, photos taken. I think that's what we call head-turning design. So when we have head-turning design with really good technology, performance, acceleration, comparable to the best in the world, customers who want that will really be the ones who will get attracted to this.
How far is the time when you'll be competing on a global level? So export plans and going at a global stage.
So firstly, we must create success in India. We must prove that we are capable of products which will do really well with Indian consumers. The next stage will be really to go to right-hand drive Western world markets, and then once we kind of get experiences out of that, then we look at left-hand drive Western world markets, but we're going to do that in a phased, calibrated way.
Just a few questions about the market in general. Around 4 months to go before the financial year ends. So what is the outlook this time? And so far we were hearing about slowdown concerns. Well, festival was very good. Will you be able to maintain that in the coming few months?
We've said that our full year outlook for our SUVs will be 15 to 18%, which is mid to high teens, and we hope to stay with that.
One last question. You said breaking barriers. So will it be breaking barriers in margins also for you, and about the money part of it?
No, so firstly, on the margin front, the percentage margin in EVs won't ever match ICE because the denominator is different, the taxation structure is different, so they're not comparable. We'll call out the margins on EVs and ICE differently, so all our investors and those who are interested in media can see the numbers differently. It's a new category. It will take time to build, but we will have a clear positive path.
All right, so that's the interview on new launch in the EV space done by M&M. But with this, let's move on and let's also get Chakri Lokpriya, who is joining us on the show right now. Hi Chakri, a very good afternoon. Great to have you. Firstly, help us with your take on the autos then, because the EV space specifically in the passenger vehicle space is becoming very interesting. We have the leader Tata Motors. Now M&M is planning to go big there, and in the couple of months we'll also see Maruti Suzuki coming out with their EV in the next Auto Expo, that they will be finally launching that for India. But Chakri, what's your pecking order in the passenger vehicle auto space, since a couple of these stocks have corrected? So do you believe that are they value buys at these price point?
Yeah, good afternoon. Thanks for having me. Yes, in terms of, there is a lot of action happening in the EV space. Tata Motors has had the early lead. They have a global R&D center and therefore have access to the best of the technologies worldwide. Then Maruti is a market leader in India, and they also have access to global R&D, and so does Hyundai. Hyundai is also coming out with an EV model very soon. And now M&M happens to be the now local boy who's now trying to get into the space. So there is going to be a lot of competition. The margins will clearly be likely to be lower than what they are in the traditional engines. And so now it's a question whether they will. The good thing is they have a product. Now, what needs to be watched is whether they can match up the competition.
So if you're coming in on the auto space, Naresh, I want to bring your take also over here. What's your view when it comes to the likes of M&M or Hyundai on the charts? Because M&M last 1 year itself, the stock has almost doubled itself. What's the chart looking like going ahead? Will you continue to remain bullish on this stock? And also give us a technical take on what you are seeing for Hyundai Motors as well.
Looking at M&M first, if you look at M&M, the stock has been the leader in the whole pack. And for now, it has been making a consolidation. 2700 is where there have been three bottoms. 3150 to 3200 has been where there are two tops. So this would be the range. Once we break about 3150, we get into a fresh uptrend. So for now, it's a consolidation with a longer term uptrend to be up. Hyundai, there is not much technical data to actually call out, given that it's a very new listing. So no views there.
All right, but now shifting gears to some of these companies, specifically from the power space, because today that counter or that particular sector is doing pretty well. So first up, if you can share your take on REC as well as PFC. Kunal, if I can have your take on both of these names, because of late in the past couple of weeks, definitely on the back of the news flow, these companies did got some of the bashing there, but they are seen to be recovering from their lower point. Do you believe that any of the stock is quite attractive at this price point?
So I would probably be on a wait and watch mode for REC and PFC both, because over the last one and a half odd month, so first leg of the selling for REC, for example, was from 650 to 540, and the second leg was much more choppy one, because the stock from 540 towards 480 mark, even though it corrected just about some 10% to 12%, but the V-shaped rallies and the recoveries for the stock and the sharp corrections were pretty much on the extreme side, which means that the stock has still not found its trend or momentum back again. In these kind of circumstances, we typically wait out for a breakout or a confirmation of a breakout. The first level of a breakout for REC, for example, would be closer to the 540 mark, which was the previous resting point or the support point of the previous price correction for REC. So I believe that one needs to wait out for a breakout of 540 levels. Same with the case with Power Finance. I think that level is around 504, 505 mark on the spot level. So maybe another 2-3 percentage points higher from current levels, and that's where I would probably get a lot more confidence that maybe these stocks have gone back into completion of the previous corrective phase and then looking to restart a major uptrend. Otherwise, the move would be choppy. If you tend to buy these stocks at current levels, you might probably look out for maybe a 15-20 points on the upside, but the risk reward would be, I think, closer to 1:1 or less than that.
That's the view coming in from Kunal on PFC and REC, waiting a little bit more to see some confidence on both of those stocks. But Chakri, coming back to you, I want to get your the sense that you're making of the IT pack. If you take a look at this index on the month-to-date basis, it's the top sectoral gainer, 9% higher for this month that's gone by. Give us a sense of what you're seeing, because if I take a look at some of the names, you have mid-cap names like Coforge and Persistent that are at all-time high. On the flip side, your large-cap Wipro is at its 52-week high as well. Tell us, what's your outlook going in on this sector, given everything that's been happening in the US with the elections and with Trump's new policies, and also the fact that this sector has been doing quite well recently. So how would you play this sector, large cap or mid cap IT picks? What's your take over here?
Cap IT will do well because of multiple good reasons. One is Trump coming back, lower corporate tax rate in the US means greater IT discretionary spend, good for Indian IT companies. Second is economic cycle in the US was turning positive. Lower interest rates help IT companies a lot, so that is good. Third is, in terms of all kinds of companies, both financial services, which are big IT spend companies, and manufacturing companies are beginning to have big plans for cloud spending. Now, so which means your large cap Infosys, TCS will do well on one hand. Second, the ERD companies, companies like KPIT, Persistent. Now, these companies, I think, have actually not participated in the rally yet, and I think it's worth looking at KPIT.
Right, that's a take on the IT space, but today the whole EV space is seen to be buzzing, and one such stock related to that is Exide Industries, definitely an auto ancillary company. But Naresh, good price action happening today because just taking support near to that 400 odd levels, the stock is once again resumed its uptrend. But how much do you trust today's move, Naresh, and what's your take on Exide Industries 444 on the spot levels today?
So today's move is a strong one, given that it's taken out the last few days' highs. Volumes are also decent, and it has seen a decent enough correction. If you look at, say, a top of 580, 600, all the way down to 400, so good 30% correction. A bounce back towards 480 is what I would expect in the near term. Would be a buy at current levels and keep a stop loss below 435.
Next side is what is Naresh's view. Chakri, would you like to chip in with what the stock is looking like on the fundamental front?
Exide and Amar Raja both have corrected quite a lot. Both are very important. They're both the market leaders in the battery space. So both have plans in the lithium ion and in the new age batteries, but there hasn't been much actual traction. So I think if you're a long enough waiter investor, then these two companies are worth looking at because very important new battery technology as things go EV.
All right, that's on the battery companies. But if we talk about some of the biggies in the markets and specifically look at the move in HDFC Bank, that is now trying to lend some support to the Nifty Bank as well, holding on to gains of 1.4% right now. So Kunal, if you can help us, where do you see the stock headed? Because this week has been pretty great for HDFC Bank. Yes, we all know the MSCI rebalancing trigger. The stock is at its 52-week high levels, but now seem to be crossing that 1800 mark. Which are the next levels that you are eyeing at?
Yeah, so this seems to be like a very strong and a potential, powerful breakout for HDFC Bank because there were three, previous attempts towards the stock trying to cross over that 1800 level. So 1794.97 approximately was the high for HDFC Bank for the last, many quarters. So it seems like the stock has finally managed to surpass this level. If it sustains for say another, 1 week above the 1790 levels, then I would believe that the move could start to get a lot more stronger for HDFC Bank going forward. There are a lot of things which have happened, so the stock has found its mojo back in terms of the leadership quality. The stock seems to have come back into a good price volume breakout mode. The correlation for the stock with respect to the banking index has also improved in the last say 3-4 weeks of the price appreciation for HDFC Bank. So I think on the back of this, my expectation is that the stock should do pretty well. 1950 to 2000 could be a potential broader target for the stock because we've seen historically that whenever the stock gives a breakout of such kind of a major time frame consolidation, then at least 8 to 10% rally is what we expect into the stock in the near term.
50 to 2000, quite the uptick is what you're spotting on HDFC Bank, and that sounds optimistic for the stock coming in. Chakri, I want to shift your attention to the entire real estate space because this pack has been doing well. You had a note coming in from Jefferies yesterday where they like Lodha, Godrej and DLF, but if you take a look at what the index has done on a weekly basis or on a monthly basis, not much is happening. And today Prestige Estates is also under some pressure. Q2 has largely been mixed for all of these real estate companies. Tell us what's your view going ahead and what names are you liking from the entire real estate space? Also, talking about this entire conjecture that's there in the market about the new real estate policies coming into place now that the Maha-Yuti government is going to be formed in Maharashtra. Tell us what sense are you making of the real estate space and how this new government election can also help this space going ahead.
Maharashtra is a very important state for the India's GDP as well as, the construction plays a very big chunk of employment in Maharashtra. And that activity has slowed down in the run-up and during the elections for the last few months. And now that there is a clear in BJP mandate. So that will help clearly revive the prospects for the construction. And so which means macro tech is one of all the Bombay-based players are prime beneficiaries. And second, there are some very big infrastructure projects. So there, companies like Prestige will also have, participate in that happening. And then, we still, I think, interest rate cycle is still, we're at the peak of the cycle. So as that turns in the next month or two, I think that'll be an additional catalyst. So definitely buy macro tech.
Right, that's the take on the real estate pack, and it's a definite buy coming in on macro tech developers. But it's just a few minutes left for the markets to shut shop. So let's try taking the BTST ideas by our experts. And Naresh, if I can start with you, what are your top bets for the BTST trades?
About Tech Mahindra, the stock is on verge of a new 52-week high. Stop loss at 1740, target price of 1790. Second is the Barnes Engine, close to making a breakout move, a revised stop loss at 910, target price of 945.
Coming to you now for your BTST trades, tell us what are you liking?
So I'll go with the one Syngene. That's a chart which is looking attractive. Targets of 960, stop loss to be kept at 900. And Interglobe Aviation is the other stock which is looking fairly attractive. The stock confirming a breakout and coming closer to the filling of a major gap, which is just around that 4,000 to 8,300 level. So would suggest about Interglobe Aviation. Targets to be kept at 4,400, stop loss at 4,200.
All right, that's the take, and those are the calls coming in from both of our experts. So Syngene is coming out as a consensus buy by both of our experts right now. So let's watch out for that. But for today, if we talk about the movement in the pharma space, a couple of these movers in the recent past from Laurus Lab, Granules India, they are seen to be drifting lower. So let's see how pharma sector all in all performs. But today has been a good day actually for the cement counters. And Chakri, if I can help with your take on the cement pack, because just a recent report coming in from Elara Capital, they are highlighting that the prices struggled to gain the momentum. The all India average price hovers near the September levels, and the price hike attempt of rupees 5 to 25 rupees per kg, that is not building on to the rest of the regions. They are just sustaining at these levels. But the stock price movement is definitely not sustaining, Chakri. It's been a good day for the cement companies. Any of your top bets from this sector, and how do you see the overall landscape shaping up?
Clearly the ones in the cement sector, ACC, Ambuja, after the recent fall due to the Adani related reasons, and they're also the market leaders. So, they are pushing through the volumes which is there in the markets. They are acquiring companies, and therefore, ACC, Ambuja would be the first ones to buy. And second would be Ultratech. This has become an industry because of ACC and Ambuja, who have led the acquisition spree. And it's going to become a volume. It has becoming a volume-driven industry and not a price-driven industry. So market share is becoming more important, and therefore these players, our market leaders, will benefit.
Okay, Chakri, also want to get your view on this entire FII activity that we've been seeing over the last couple of days, because if you see, they've turned net buyers after being net sellers for 38 consecutive sessions. It's looking positive. It's starting to look positive. It's just been 2 continuous days of buys coming in from FIIs. Do you believe that now it's a good time for from an FII perspective to start investing again into the Indian markets? And also on that note, do you believe that the consolidation that we've been seeing so far has come to an end, and now we only have good days ahead? What's your take on that?
Post the earnings downgrade for the index, the market and also the market fell along with that, and now the market is trading probably at about 17, 18 times, which is a very good valuation number. It's not expensive at all, and kind of reflects that earnings have slowed down. So at this point in the cycle, therefore, growth is very important for FIIs, because on one hand, you have currency depreciation, which takes away returns, and therefore that has to be compensated by higher earnings growth, which was missing. Now, with the stock, with the earnings kind of hopefully bottoming out, and if an RBI cuts rates, that will be a catalyst for FIS to start coming back. So, and clearly, in terms of the market, is clearly looking attractive after the fall. Many of the stocks in PSG stocks, some of course, the Adani stocks, many of the stocks have fallen quite a lot, and therefore worth considering buying at current levels.
All right, but just 10 or 12 minutes left for the markets to shut shop, and what we are seeing is that the markets are heading for a decent close in today's trading session, though the India Wix has now down to about 4% in trade right now, but it's Nifty 50 that is holding on to well above those levels of 24,200, taking support at that, and 24,275 is the spot level, while for Nifty Bank, it's more than 100 points of gain, so nothing much to complain, but yes, indeed, the Adani group of counters have been the star performers. But Chakri, today if we look at some of the beaten down names, especially from the likes of Vodafone Idea, we all are aware about the troubles that are going on, but it's the second straight day that the stock is moving on, as well as today is now gain of almost 11.5%. So Chakri, any take here on Vodafone Idea, because it's just the first positive news that has come in for this particular stock, but what is the overall outlook on the telecom space, if you would like to share?
The government removing the funding requirement, collateral requirement kind of helped. I mean, that's what helped Vodafone and as well as Bharti. But, this doesn't really solve the problem, between them. They have 1 lakh crores. Vodafone, of course, has like 70,000 odd crores, which still has to repay. They have to find the money to refinance it. And ARPUs are not going up at any other kind of speed to be able to bring down the debt. So, it's best that, it's great that if you had got the stock on a trading, but I would still stay away from an investment perspective.
Okay, so that's the take coming in Vodafone Idea. Naresh, any technical take coming in on this stock?
Really, we've broken down the major price points over the last 3 months. Going forward, 8.5 is the first price point, which is a resistance, and then 10, which is where the issue took place to the government. So till the time we don't go back about 10 levels, the stock continues to be in a downtrend. And 6.5 has been the low for the last 2 years. So that is a price point. So I would expect it to be range bound for the next many months.
Okay, so range-bound moves are expected on Vodafone Idea from Naresh. But let's keep it going about a lot more sectors. And Chakri, I want to get your sense on the entire FMCG space as well. Now, Q2 has been quite mixed when you take a look at the volume growth. But we are hearing that there are some companies that have undertaken price hikes to combat that. Do you think that this corrective measure of taking a price hike is going to aid the market share story going ahead? What's your outlook on all of these FMCG companies then?
India's inflation, which has been about 6 odd %, the price hikes have been around less than that. So, they're probably trying to cover up at least for the costs, the inflation costs. So that shows that there is clearly no pricing power yet. Given that, and there is no product innovation, and overall demand is kind of cyclically sluggish. It will cyclically turn up. There's nothing in particular which would want us to make and go and buy FMCG names.
All right, but though the index movement is very subdued in today's trading session, but key to mark is that a lot of stock-specific action and some of these beaten down names are making a very strong comeback. Look at the move in some of these defense names. The railway stocks are doing pretty well, and even one of the recently listed counters, that is Swiggy, that is now up around 9% in trade today. So a very stock-specific action today. But Naresh, specifically, let's put the spotlight on the defense names. Yes, indeed, the recent JP Morgan note did fuel the rally and did get some respite to all these beaten down names. But do you believe that the recovery could be substantial from these levels, and any stock that is still looking attractive to you, you would like to point out?
So there has been a fall of 40-50% on a lot of these names. So something like Bharat Dynamics has fallen from 1800 to 950. Going back to 1200 would be normal. So we would expect a bounce back from the lows, recover some bit of it. But overall, the longer term trend remains weak. The only name which really has a strong chart and still looks interesting is Bharat Electronics. That's the one which had not seen a mad parabolic move, and now has consolidated, given a fresh breakout. So in dips, it would be Bharat Electronics as the preference. And then maybe one could look at Hindustan Aeronautics.
Okay, so BEL followed by HAL is the pecking order for Naresh. Kunal, would you chip in here about your take about the defense companies, especially what you're making of shipbuilding stocks like of Garden Reach, Cochin Shipyard? They have been doing pretty well after this recent consolidation that they've seen. What's the outlook on the charts?
It's difficult to handpick just one or two names, but I think it's the overall basket which is looking very attractive. So I think the best way to try and chip into this space is to try and buy the stronger names and the more formidable ones. So yes, of course, PEL, HL are the stronger names, but from the shipbuilder names, GRSC, Cochin Shipyard, Mazagon Dock, these stocks have already corrected. So when you look at this for the last 6 months or so, there was broadly a 47 to 50% plus kind of a correction for many of the stocks in this space. Even after this today's rally, when we look at this from the the performance of these stocks from their recent highs, they are still off by a margin of 35 to 40%, and that's a steep kind of a margin on the downside for these names. So I think one should not be looking out for that. These stocks have bounced off 5%, 10% from their previous swing lows, but look at it in a manner in which that these stocks are still yet to cover and come back and cover up the huge underperformance and the correction over the last 6 months or so. So I believe that the entire space looks attractive. Difficult to just about pick or handpick one or two names, because what happens is in the best of the momentum times for the defense and the shipbuilder names, all of these stocks, they tend to perform in a very similar kind of a price trajectory. So the entire space looks attractive.
Okay, so space is looking attractive from the defense front. Thanks, Kunal, for that. But on that note, Chakri, Kunal, Nuresh, thank you so much for joining us. We'll let you go and let's start wrapping up for the day. Take a look at what the closing trades are looking like right now. And you have Nifty close to 24,280 at 24,277 on the spot. 0.3% uptick coming in for the Nifty. You have Sensex that's following suit. 0.3% uptick coming in on the Sensex as well. Advance decline ratio today in the favor of the advances. So it's been a good day of trade for us. Nifty Bank 0.2% higher and just very close to that 52,300 mark. So looking solid on that front as well. The broader markets have held up really smartly today. Nifty mid cap up 0.6%. The small cap has once again outperformed the entire street. 1.3% uptick coming in for the small cap. So it's looking good over there as well. If you take a look at sectoral gainers and losers, energy, media, metal, your big gainers today. On the flip side, pharma, realty, IT, the only three segments that have actually ended the day in the red. So that's looking weak for these sectors. If you take a look at some individual gainers and losers that have kept Nifty afloat today on the gaining side, Adani Enterprises, Adani Ports, good gains coming on this front. BEL, Trent, NTPC, and of course the new listing today, NTPC Green, that has also done pretty well after its listing. So all of these stocks looking good and holding up smartly in today's trade. However, on the flip side, what's not done well from the Nifty pack today is Apollo Hospitals, Titan, Shriram Finance, a 1% cut coming in on all three, followed by Britannia, Wipro, Hindalco, and Asian Paints, and Dr. Reddy's as well. So this is something that has not done well for the trading session today. But even on the back of the brokerage front, you had a couple of stocks that were in focus. The Morgan Stanley note coming in on Hyundai, initiating an overweight rating. So that stock seems to have held up pretty smartly in today's trade. 1.5% uptick coming in there. M&M also, Macquarie, Nomura, Jefferies, all throughout the board. You have positive notes coming in. UBS on Siemens, good set of numbers coming in from Siemens. They've maintained a neutral rating. So let's see how that stock is shut shop. Of almost 2.5% higher. You have moves coming in on Siemens as well. And Prestige Estates, however, the one that was beaten down today on the back of that Morgan Stanley cut coming in, downgrade coming into underweight. So Prestige Estates deep in pressure, 4.5% lower. Morgan Stanley has initiated an overweight on Coal India as well. So that stock has been holding up pretty smartly. And Morgan Stanley also prefers HPCL, BPCL from the OMC space. So all eyes were there on the OMC space as well. But well, yes, this is how we're shutting shop for the day. 24,276 on the Nifty. So with that, it's a wrap on this edition of Closing Trades. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.